It's Tuesday, June 3rd, 2025. Breaking news. Tonight, in a move that screams Big D energy, Donald Trump's Truth Social just filed for a Bitcoin ETF. NYSE Arca submitted the paperwork to the SEC for the Truth Social Bitcoin ETF, a financial product that lets you invest in Bitcoin without actually owning any Bitcoin. Classic TradFi sleight of hand, with a MAGA twist. The ETF will be managed by Yorkville America Digital and custody handled by Forest Dax Trust. But let's not kid ourselves. The real puppet master is Trump. His name doesn't appear on the documents, probably because even the ETF wanted some plausible deniability. Trump's media arm, DJT, has been busy morphing into a crypto circus act, cutting deals with Crypto.com, talking up a Bitcoin treasury, peddling meme coins, and now launching an ETF like it's Shark Tank for boomers. DJT's stock got a little bump, up almost 1% after hours. Why? Maybe because retail investors are convinced it stands for Big Trump Coin. This whole saga is the financial equivalent of slapping a gold-plated B on a box of spaghetti and calling it blockchain. But hey, if the SEC greenlights it, Trump's going from reality TV to ETF kingpin, and your aunt's retirement fund might just moon. I'm Max Volts, and this is Crypto Wars. Because nothing says decentralized revolution like an ETF from a guy who once sold steaks on TV. And if Trump wants to ETF his way into Bitcoin royalty, Hong Kong just said, hold my forklift. Reitar Logtech, yes, a logistics tech company, is in talks to buy up to $1.5 billion worth of Bitcoin as part of a massive treasury diversification play. That's 15,000 BTC on deck, with shares being swapped for sats like it's Wall Street bartering season. Their plan? Use this move to strengthen their balance sheet and power expansion into Asia's smart logistics market. Translation: stack sats and flex on competitors. The deal isn't finalized yet, but the filing shows Reitar Logtech is deep in negotiations with a crew of digital asset whales. If it goes through, it'll be one of the largest BTC acquisitions by a public company, right up there with the MicroStrategies and Teslas of the world, except with more warehouses and fewer memes. CEO John Chan says the move aligns with digital transformation trends. And hey, when the shipping industry starts quoting Satoshi, maybe it's time the Fed stops pretending Bitcoin is just for criminals. Reitar stock popped 11% after the news, because apparently adding Bitcoin to your treasury is the new Six Sigma. While Hong Kong goes full logistics laser eyes, Michael Saylor's back at it, doubling down like it's 2021 with extra caffeine. Strategy, formerly MicroStrategy but now apparently rebranded for Maximum Bitcoin Vibes, just announced a $250 million fundraising plan. The tool of choice? A brand new class of 10% Series A perpetual preferred stock, ticker symbol STRD. Translation: rich people get a steady dividend if strategy feels generous, and Saylor gets more ammo to stack sats. They're offering 2.5 million shares at $100 each, and the proceeds? All aimed at scooping up another pile of Bitcoin, roughly 2,351 BTC, at today's price of 106K. Because apparently, 580,955 Bitcoin wasn't enough. The man's building a digital Mount Rushmore made entirely of Satoshis. These preferred shares don't mature, don't carry over unpaid dividends, and only pay out when strategy decides to. Basically, a financial trust fall into Saylor's arms. If this all sounds familiar, that's because Strategy's been issuing stock and convertible notes to buy Bitcoin like it's their only business model. Which, to be fair, it kinda is. Also, Barclays, Morgan Stanley, and Moelis are all helping run this offering. Wall Street might still trash-talk Bitcoin on CNBC, but they're more than happy to help sell it to the masses in preferred stock wrappers. Meanwhile, in the icy fjords of financial freedom, Norway just went full orange pill. The Norwegian Block Exchange, ticker symbol NBX, became the first publicly traded Norwegian company to adopt the Bitcoin standard, grabbing headlines and a cool 138% stock surge after announcing its new BTC treasury strategy. So how much Bitcoin did they buy? Just 6 BTC to start. Pocket change by Saylor standards, but it's not about the size, it's about the signal. NBX plans to scale that up to 10 BTC by the end of the month, using it as collateral to launch a MiCA-compliant stablecoin called USDM on Cardano. Yep, Bitcoin for the reserves, Cardano for the rails. That's like backing a tank with gold and mounting it on a hoverboard. Bold move, Norway. The play is part of a larger vision, turning NBX into a regulated digital asset bank for the Nordic region. They're using insured custody, DeFi strategies, and some BTC borrowed from shareholders magic to build their own stablecoin-powered crypto bank. And they're not alone. Norway's corporate Bitcoin bug is spreading. Aker ASA owns over 1,100 BTC. K33 just raised millions to buy more. And even Norges Bank, Norway's $1.7 trillion sovereign wealth fund, has indirect exposure to over 3,800 BTC through equities. If you're an institution limited to Norwegian stocks, NBX just became your de facto Bitcoin ETF. And that might explain the 138% moonshot. And finally, while Trump's minting ETFs and Norway's launching stablecoins, the fiat parasites are still out here running scams from fake basements in the metaverse. A Kansas man just reported losing $400,000 in a long-running Bitcoin scam, according to a Better Business Bureau report. The scammer posed as a professional broker. The platform? A phony site called xtbproplatform.com. The pitch? Sky-high returns and just enough jargon to short-circuit common sense. Over 3 months, the man made 12 transactions totaling nearly $500,000. The red flag? All the calls came from virtual numbers, untraceable, uncallable, and about as legit as Elizabeth Warren's crypto credentials. The BBB's advice: meet your crypto broker in person, because nothing screams security like doing Web3 deals in a Denny's parking lot. Let's be real. Scams like this don't happen because Bitcoin is the problem. They happen because the US still doesn't have a real framework. It's a wild west out here, and the regulators are too busy sniffing altcoin white papers to police the obvious cons. So, to everyone out there, if it smells like Lambos, promises 10x returns, and has more typos than a Trump tweet, run. That's all for tonight's transmission, soldiers. And remember, this broadcast runs on pure signal from you, the glorious resistance. No corporate overlords, no pharma ads, no VC parasites whispering in our ear. Just truth, memes, and monetary napalm, shot straight from our bunker beneath the collapsing empire. So smash that subscribe button like it's a central banker's fax machine, and share this show like you're airdropping hope behind enemy lines. Because in this war for your wallet and your mind, Crypto Wars is your daily dose of digital defiance.